All right, everyone, we have to jump right into this. Today has been an absolutely wild day in the crypto market. We're in the middle of a massive event, and we need to break it all down, right here, right now. All right, everyone, we have to jump right into this. Today has been an absolutely wild day in the crypto market. We're in the middle of a massive event, and we need to break it all down, right here, right now. All right, everyone, we have to jump right into this. Today has been an absolutely wild day in the crypto market. We're in the middle of a massive event, and we need to break it all down, right here, right now. All right, everyone, we have to jump right into this. Today has been an absolutely wild day in the crypto market. We're in the middle of a massive event, and we need to break it all down, right here, right now. So what happened? Well, the entire market just got slammed by a massive external shock. And it's so important to understand this wasn't some tech glitch or normal correction. The trigger came from completely outside the crypto world. And the impact? It was just staggering. We're talking about an estimated $20 billion in long positions that were just gone, wiped out. I mean, to put that into perspective, that's a catastrophic amount of leverage being flushed out of the system in just a few hours. All of that chaos triggered a massive flash crash that sent Bitcoin plummeting to a shocking $102,000 on Binance. Now, yeah, it bounced back pretty quick, but just seeing that number flash on the screen, that tells you everything you need to know about the absolute panic that was going on. So, this brings us to the two big questions on everyone's mind, right? First, what in the world actually caused this? And second, maybe even more importantly, what's the smartest, toughest trading strategy you can possibly have right now? Let's get into it. Okay, so first, let's just unpack the sheer scale of this liquidation shock. You gotta understand, this wasn't just a price drop. It was a complete and total collapse of market psychology, all happening in an instant. The damage was just everywhere. Bitcoin dropped almost 8%, but other assets, the ones that are usually a bit more volatile than Bitcoin, they got hit even harder. Look at Ethereum, down almost 12%. It just goes to show how fast investors were dumping risk across the entire board. And this slide right here, it perfectly captures that collapse in confidence. The fear and greed index just fell off a cliff. It went from 64, which is well into greed territory, all the way down to 27, which is deep into fear. A swing that big in just 24 hours, that's the textbook definition of a market panic. So what was the big domino that knocked everything else over? Let's get to the geopolitical news that just steamrolled everything in its path. And there it is, the smoking gun. This whole flash crash was triggered by President Trump's announcement of a 100% tariff on China. This is the very definition of an external macro shock. An event so powerful, it just completely canceled out all the other positive things that have been pushing the market up. You know, some market execs had actually warned that Bitcoin could be, and I'm quoting here, dragged down a bit by these tariff concerns. Of course, what we saw was a whole lot more than a bit, but it does confirm just how sensitive the market was to the specific political risk. Okay, with all this red on the charts, it's so easy to get lost in the short-term chaos. But now it is absolutely crucial to separate the trigger from the trend. So let's zoom out and look at the bigger picture, the long-term institutional story, which, believe it or not, is still very much intact. And what's really amazing is that these big moves are happening right now, at the same time as the crash. I mean, think about it. Morgan Stanley just opened up access to crypto funds for all of its wealth clients. That is a massive new wave of potential money. At the same time, you've got huge banks like BofA and Goldman Sachs researching G7 stablecoins. These are the foundational shifts that don't get stopped by one bad news day. Now, check out this really interesting split happening in the altcoin market. While the more speculative alts like Solana and Cardano were getting absolutely crushed, privacy coins, especially Zcash, actually surged. Zcash is up over 13%. This suggests that in times of geopolitical chaos, some investors are running to assets they see as being more private and censorship resistant. It's a very specific and very telling market reaction. And this all ties into a metric we call Bitcoin dominance, which is now at a super high 59.5%. All that means is that nearly 60% of all the money in crypto is parked in Bitcoin right now. This is a classic flight to safety inside the crypto world. When fear spikes, money flows out of the riskier altcoins and into what traders see as the relative safety of Bitcoin. Okay, so this brings us to the most practical part of this whole thing. Given everything we've just seen, how should you be managing risk right now? Let's build a proactive strategy.
First things first, we gotta set our expectations straight. A V-shaped recovery, a quick bounce back to the highs, it's really unlikely after a wipeout this big. Instead, what analysts are expecting is a slow bottoming process. That means more chop, more volatility, and a period of just grinding it out. So it is time to adapt a hardened risk strategy. Step 1, and this is non-negotiable, avoid high leverage. The volatility can and will wipe you out in seconds. Step 2, prioritize quality. This is the time to focus on blue chip assets like Bitcoin and Ethereum and have some stablecoins on the side. And step 3, you have to actively manage your altcoin positions. With Bitcoin dominance this high, alts are probably going to get hurt the most until things calm down. Now, to navigate this slow bottoming process, you're going to need a dashboard of key indicators. So let's look at exactly what you should be watching over the next few days to get a read on the market's health. Okay, here's your recovery dashboard. Keep a very close eye on that fear and greed index. If it drops below 20 into extreme fear, that often signals that everyone has given up, which historically has been a good time to buy. Of course, any new chatter about those US-China tariffs will move the market instantly. On the institutional side, watch the ETF flows. They're negative right now, so if they flip back to positive, that's a huge sign that big money is buying this dip. And finally, remember the market cycle. Many believe we're in an acceleration phase, which is known for exactly this kind of wild, violent volatility. So to wrap it all up, the market is in a really delicate spot. It's trying to absorb a huge, unexpected macroeconomic punch and find its footing again. This is a time for patience, for discipline, and for focusing on managing your risk above everything else. Which leaves us with the biggest question of all. Was that crazy wick down to $102,000 the real bottom of this brutal correction? And are you a buyer at these levels of fear? Let me know your strategy down in the comments. Stay safe out there, and I'll see you in the next one.